Hello friends, today we're looking at the Nifty chart for 6th of June 2024 and we're discussing Kaizen strategy. I've explained the Kaizen strategy in the past videos. However, I will spend 1 minute explaining the Kaizen strategy. I would suggest that you look at the strategy so that you'll understand the strategy better and we take it forward from there. This is an intraday strategy and basis the strategy we take an input almost on the first candle on most days and stop losses are rarely hit. So we call it the Kaizen strategy. I'll first explain the strategy to you and then I will show this live on the charts. We draw three lines. The first one is a CE above line. That is, if the price sustains above this line, we go long. There is a safe entry minimal stop loss line, which is the safest entry, or if people are scared, they can take a stop loss there. But that's typically midpoint. And then we have a PE below level. So we draw these three levels basis the previous day's market conditions. So once the markets close at 3:30, we decide on what the CE above level is going to be and what the PE below level is going to be. This, like I was mentioning, is basis the previous day's operations in the market. We decide on two levels, and the way the strategy works is that if the price opens on the top, in all likelihood, that is, if it gaps up, in all likelihood, it's going to come into the zone and then go up from here. At times, it is going to gap up, just touch these levels and go. Very, very, very rarely, it is going to come, go down, 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 all the way down. Very, very rarely, but there's a possibility that one of these three happens. And if the market gaps up, that is, if it gaps up, like I was mentioning, it'll come into the zone and go up, or it'll come here and then go this way, or it could go all the way down. We'll explain each one of the scenarios in detail. Now, if the market gaps down, then in all likelihood, it is going to come into the zone and then go down, or it's going to come touch the zone and go down. In a very, very, very rare scenario, it is going to go all the way up. We will track all three scenarios and then plan on what we should do with regards to our trade. Of course, I'm going to show you how this is worked today, and we'll also have some videos uploaded to show you what happened in the past. Now that we understand the strategy, let's look at the levels. We had our buy CE above on 6th of June, Thursday, at 22,671, and P below was 22,429. We were bullish right from the beginning. So as soon as the price got into the zone is where we entered and rocket up all the way. Of course, it only hit target 1. It did not go to target 2. It reversed back. Again, took support at C1, went up to target 1, back again, took support again at C buy, went to target 1. It did not go to target 2 for the second time. This was giving us some scary feeling, but we were like, I'm sure the stop loss is not going to hit. So we kept attempting. The third time, again, it came to C above, and then from there it went up. That's what happened on expiry. So you got to trade 1, a small trade 2, a small trade 3, and a small trade 4. All of them were CE trades and they were initiated from CE above level, stop loss being safe entry midpoint level. That was for Nifty. We are in the strike chart for Nifty, and this is 6th of June, Thursday, and since it was expiry, we were trading Nifty, and here is where it is. Okay, so this is our chart. The price opened well within the zone. The C buy was at 97 and P below was 39. We took an entry somewhere around here. This is the levels that we've taken an entry. This is a stop loss level. We took an entry here and we exited at the first target, which is about 70%. If you held on, you would have probably made about 100%, but we exited at 70%. Why? Because the price was not increasing at the rate at which it had to increase, and so we exited. It came back again at a P level and a P buy level. However, P was not ready because P levels are far below. And since this level didn't break, we took another small entry here and captured a neat 30% here. After which it came here, we attempted 1, we hit a stop loss, and then there was a final attempt here. So we got one small trade, 70%, one trade of about 40%, and another trade of about 50% plus here. So that was the trades for Nifty on Thursday. Again, like I mentioned earlier, we did not look at any PE trades because the PE levels were far below and there was absolutely no entry in PE. Okay, let's look at what our Bank Nifty had done on Thursday, 6th of June. Though we were very keen on doing the Nifty trade, Bank Nifty is something that we track every single day for the same strategy. So we opened, we were bullish, it got into the zone. This was a stop loss zone. The moment it got out, we got in, it went to target one. It did not move any further from there, and hence we were waiting for a retrace. It's come down, 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 all the way to the midpoint level. And from here, again, it went to C1 above. The second time it came down and then went up. So you had trade one, a small trade, and then you had trade two, which is another small trade, and trade three, another small trade. There were three trades basis the strategy on Thursday. Of course, all of them were small. Typically, what happens on a sideways day, we couldn't do much, but had to take small profits in Bank Nifty and Nifty.